Hello everyone. In this video, we will discuss about mutual funds, a simple and effective way to invest your money, especially if you are a beginner. Whether you are new to investing or don't have the time to research individual stocks, mutual funds can be a great option for you. But at the end of this video, you will understand that mutual funds are how they work, their benefits, and how you can start investing in them. First of all, number one, what is a mutual fund? A mutual fund is a pool of money collected from multiple investors to invest in various assets like stocks, bonds, gold, or other securities. These funds are managed by a professional fund managers who make investment decisions on behalf of the investors. When you invest in a mutual fund, you buy units of the fund, and the value of these units is called the net asset value. Example: imagine you and your friend want to buy a pizza, but no one has enough money to buy a whole pizza. So you all pool your money together, buy a large pizza, and share it based on how much each person contributed. Similarly, in a mutual fund, investors pool their money, and the returns are distributed based on their contribution. Now let's talk about why should you invest in mutual funds. Here are some key reasons why mutual funds are a great investment option, especially for beginners. Number one, professional management. You don't need to worry about picking the right stocks or timing the market. Expert fund managers handle everything for you. Number two, and diversification. Mutual funds invest in a variety of assets which reduces the risk of losing money. For example, if one stock performs poorly, others may perform well, balancing the loss. Number three, affordability. You can start investing in mutual funds with a little investment as 500 or 1000. This makes it accessible to everyone. Number four, liquidity. You can easily redeem your mutual fund units and get your money back whenever you need it, except in the case of closed-ended funds. Number five, tax benefits. Certain mutual funds like equity link saving schemes offer tax benefits under Section B 80C of the Income Tax Act. Now let's talk about types of mutual funds. Mutual funds are categorized based on the type of assets they invest in. Here are the main types. Number one, equity funds. These funds invest primarily in stocks. They are high risk but can give high returns over the long term. Examples include large cap, mid cap, and small cap. If you don't know what is large cap, mid cap, and small cap, you go my channel and see my stock for beginners videos, then you understood these. Number two, debt funds. These funds invest in fixed income securities like bonds and government securities. They are less risky than equity funds and are suitable for conservative investors. Number three, hybrid funds. These funds invest in a mix of equity and debt, balancing risk and returns. Number four, index funds. These funds track a specific index like the Nifty 50 or Sensex. They have lower fees and are a good option for passive investors. Number five, sectoral thematic funds. These funds invest in specific sectors like IT, healthcare, or infrastructure. They are riskier. Riskier as their performance depends on the sector. Number six, ELSS means tax saving funds. These equity linked funds are offer tax benefits and have a lock in period of 3 years. Number then these are the types of mutual fund. Now let's we talk about how do mutual fund work. Let's understand this with an example. Suppose you invest 10,000 in an equity mutual funds. The fund manager pools you money with other investors and uses it to buy shares of different companies. Now, if the value of these shares increases, the NAV of the mutual fund also increases, and you earn a profit. Conversely, if the value decreases, you may incur a loss. How to start investing in mutual funds? Are you thinking about investing but don't know where to start? Mutual fund might be the perfect option for you. Mutual funds are a great way to grow your money without needing to be financial expert. How to start investing in mutual funds? First of all, you need to set your goal. Decide why you are investing. Example, you invest for retirement or for your child or buying a house, etc. And our next step is choose a platform. Use platforms like Vanguard, Fidelity, or Chase, Square, etc. And our next step is pick a fund. Look for funds with low fees, expense ratio, and a good track record. And our next step is open an account. You will need your social security number, SSN, and bank details for this for start to invest in mutual fund. And our fifth step is start investing. Decide how much to invest. It's depend on you. You invest $100, 500, 5,000. It's all depend on you how much you invest and set up automatic contributions. And number five, and our sixth step is how much should you invest. Start with what you can afford. Even 50 or 100 a month can grow over time. Use the 10% rule. Aim to invest 10% of your income. Now we will discuss about tips for successful investing. Number one step. Number one tips, start early. The sooner you start, the more time your money has to grow. Number two tips, stay consistent. Invest regularly, even if it's a small amount. Number three tips, diversify. Don't put all your money in one fund. Separate it across different types. Number four tips, monitor your investments. Check your portfolio once or twice a year to ensure it's on track. Now we will discuss about the common mistakes to avoid. Number one, number one mistake is investing without a goal. This is now why you are investing and how much you need. Number two mistake that you avoid is picking high fee funds. High fees can eat into your returns. Look for funds with low expense ratios. USA amidst Australia. Number three, panicking during market drops. Stay calm and stick to your plan. Markets always recover over time. Let's say you start investing in mutual fund of 5,000 per month in an equity mutual fund with an average annual return of a minimum 12% and maybe the company made more profit per year. Here's how your investment will grow over time. First, we talk about after 10 years, it's become 11.5 lakhs dollar, and after 20 years, your investment become 49.9 lakhs dollar, and after 30 years then we see then your investment make 1.75 crores dollar. This is the power of compounding and disciplined investing. Final thoughts: investing in mutual funds is one of the easiest and most effective way to grow your wealth. The steps are simple: set a goal, choose a fund, and start investing. Remember, the key to success is start early and staying consistent. Conclusion: now we discuss about all these of conclusions of our video of mutual funds. Mutual funds are an excellent way to grow your wealth, especially if you are a beginner and you don't know have enough knowledge about mutual fund. They offer professional management, diversification, and flexibility. The key is to start early and start consistent. Remember, investing is a journey, not a race. So take your time, do your research, and make informed decisions. If you found this video helpful, don't forget to like, share, and subscribe to my channel for more such content. And if you have any questions about mutual funds, drop them in the comments below. I will be happy to help. Thank you for watching and happy investing.